SpaceX is finally going public, hitting the market at an unprecedented $1.77 trillion valuation. Wall Street and the media want you to believe you're buying a one-way ticket to the future. But if you look at the raw financial data, the math tells a completely different, terrifying story. This isn't just an expensive stock. This is mathematically the most dangerous IPO in stock market history. Today, we are breaking down the market signals that prove why retail investors are being set up to hold the ultimate bag. Let's talk about the price. At the target IPO price of $135 per share, SpaceX is commanding a price-to-sales ratio of more than 67 to 1. When tech or industrial IPOs enter the market with a price-to-sales ratio over 40, they underperform the S&P 500 by an average of 58.5%. For a $1.77 trillion company to satisfy Wall Street, its underlying cash flows have to grow by roughly 600 times over the next decade. No mega-cap corporation in human history has ever accomplished a 600-fold growth leap at this scale. You are paying a premium for a miracle. While the public focus remains on Starlink's growing internet revenues, the actual balance sheet tells a completely different story. Pull back the curtain, and the core spaceflight division actually posted a massive operating loss of $619 million. Even more alarming is the newly integrated XAI division, which lost a staggering $2.5 billion. Retail investors think they're buying a sleek rocket company, but they are actually inheriting a massive, cash-burning AI data center footprint. The smart money sees the red flags. Morningstar has formally valued SpaceX at $780 billion, meaning this IPO is overvalued by more than 50%. Major international funds, including Denmark's Akademiker Pension, have already placed SpaceX on their strict exclusion lists. SpaceX is only floating 4.2% of its total shares to the public. It's a classic Wall Street supply squeeze. Intense retail FOMO and media hype will almost certainly engineer an artificial day-one spike. But don't mistake that spike for financial health. It is a ticking clock. The 180-day insider lockup period is a countdown. When the lockup expires, insiders will flood the gates to lock in profits, and retail investors will watch their capital evaporate. SpaceX is undeniably a generational engineering marvel. Elon Musk has revolutionized aerospace. But an incredible engineering achievement does not automatically make an asset a safe financial investment. At $1.77 trillion, the earthly math completely crushes the cosmic hype. Guard your capital and stay grounded. If you want to protect your portfolio, hit that subscribe button right now and turn on notifications for market signals. Are you buying into the hype on day one, or are you sitting this crash out? Drop your thoughts in the comments below. Disclaimer: Market Signals is an educational channel. All financial analysis, multiples, and valuation projections are for informational purposes only and do not constitute professional financial, investment, or legal advice. Investing in IPOs carries extreme risk,